Shoppers Stop climbs more than 5% on the back of strong third quarter numbers. The company reports double-digit growth in revenue and EBITDA. Higher other income also boosts profit.
HDFC AMC shares surged nearly around 4% after the net profit grows 30% on a year-on-year basis in the third quarter. Nomura issues a buy call on the stock. Nuvama too has a buy rating and raises its target price to 5,200 rupees per share.
BSE sees more than 4% surge after brokerage firm Nuvama initiates coverage of the stock, a buy rating and a target price of 6,730, citing derivatives segment to grow despite regulatory challenges.
Auto stocks, Maruti as well as TVS climb higher after BofA upgrades both stocks. Maruti is upgraded to buy from neutral rating with a target price of 40,000 rupees, while TVS is upgraded to neutral from underperform with a target price of 2,625 rupees a share. Hello and welcome to Chartbusters. I'm Nigel and with me is Mangalam. And Mangalam, I think we're the good luck charm. The markets are at the high point of the day. You know, even on down days, Mangalam, at around 10:30 a.m., it seems the bulls, they try to get their act together. And as we speak as well, it's not the headline index so much, but actually the broader markets as well that have gained strength. And the mid-cap index from being down closer on 0.2%, that's pulled back in the green. Hopefully, the bulls can hold on to this footing, and in fact, we can see further uptrend from here.
I don't mind taking the credit for us being the good luck charm for the market. But interestingly, what has happened today is that in the first hour itself, the Nifty has managed to cross yesterday's high. Yes, there was a bit of a sell-off yesterday, but after 9 trading sessions, is the first time that the Nifty has made a slightly higher high. So that is something that will give bulls some sort of happiness after the big fall that we've seen. So maybe some comfort that may come by in today's trading session. And tomorrow, of course, we'll have the weekly options expiry play out for the Nifty itself. The Nifty Bank doing well, the broader markets as well have seen good moves in today's trading session, following up on yesterday's 2.5% up move as well at the index level. Among those stocks which are gaining, one of them which is buzzing around is Shoppers Stop on account of its third quarter numbers. And remember, the third quarter obviously is seasonally strong for all these retail companies, and in that, led by festive season, the companies reported an 11% growth in their revenues and also close to around 13% jump in their EBITDA. So as a result of which, the margins have improved by about 20 basis points. If you look at the net profit, there's a 40% jump, reported jump from 37 crores all the way up to 52 crores. What explains that is the other income, which is gained from about 3.5 crores to about 22 crores because the company got some money which it put aside for its sales tax, which is now recognized in the other income as the matter was closed. So as a result of which, the net profit moved higher, but some of the internals are fairly strong as well. What am I looking at in terms of premiumization, premium products doing extremely well, overall volume-led growth of 9%, like-for-like growth of 4% as well. The only fly in the ointment was the beauty business, which grew just about 3%. The street thought that it would see a much bigger growth because of the company's thrust out there. Fragrance in that has been growing fast, and that's something that all the other players have been calling out as well. Fragrance as a category has been doing well, and this time around for Shoppers Stop grew by 14%. The other thing I'm looking at, with the success of Trent, a lot of these companies have gone ahead and put out their own value fashion chains, and as a result of it, Shoppers Stop started this business called Intune, which now has 63 crores in revenue, so growing very fast for that. And the street is betting on some growth in the Intune business itself, perhaps replicating something like what Zudio has done. So we'll keep an eye out on Shoppers Stop. Of course, the stock hasn't moved much over the last 12 months or so. So maybe on the back of underperformance as well, the stock has seen a bit of an up move.
All right, Mangalam, big up move is what we're seeing in today's trading session. But the markets, as we mentioned, they're holding with decent gains and seeing some kind of follow through. Are we good for more? To help us out with that, Chandan Taparia joins us on the show. Hi, Chandan, what will you do? Buy into the Nifty? Do you expect this, bit of a pullback, mild pullback to extend on the way up?
Good morning, Nigel and Mangalam. Thanks for having me. So the Nifty is holding from last 2 trading sessions, even after the absence of follow buying interest. The good part is that somehow it has been moving in between 23,000 to 23,333. But the conviction will come only if holds about 23,333 zone. Because earlier in the month of November, when it formed the bottom, it witnessed a recovery of more than 1,500 points. So the same sort of level near 23,333 would give the strength for the upside. So we have to play the range between 23,000 to 23,333. About 23,333, one can add the long position for further 500 to 700 points move. Talking about Bank Nifty Index, it witnessed decent recovery on the last trading session, but on the weekly chart, it has broken a rising channel, which is working well from last 2.5 years. And support was earlier at 50,000, that could act as a hurdle. So we have to play the broader range in between 48,500 to 49,500, and above 50,000 only. The first leg of rally could be there, or the negative move will nullify to start the next leg of rally. So in both the indices, we are witnessing the range bound move with capped upside and support based buying. And I believe that sector and stocks will do better than getting the more sense on the index wise. Looking at the stock,
right.
first there is buy on Indian Hotel. One of the strongest counter which has completed its corrective move of last 6-7 weeks. Major trend is positive. It has taken support at its 50-day exponential moving average. It managed to hold 750 zone. Put writing is visible at the lower side, so up move could be seen. Recent corrective move provides the better risk-reward ratio, so one can buy with support of 790, and Indian Hotel can head towards 840. Second trading idea, that is buy on Escort. Positive on the Maruti and Escorts from the auto peg with bottom out approach. Escorts has seen a consolidation breakout of last 30 trading session. It surpasses 50-day exponential moving average after a long time, which is getting a bullish crossover for bullish stance. So with support of 3,400, one can buy for an upside target towards 3,650. Last trading idea, that is buy on BSE. We have positive view on the entire capital market theme, whether be it exchanges, depository, broking, and AMC. And Bombay Stock Exchange is one of our preferred trading ideas, where we are expecting 15 to 20% up move on the positional point of view. On immediate point of view, we are expecting 5 to 7% up move. The major trend of the counter is positive. It has completed its negative price stance and turning upwards with major price reaction. So positive price pattern can take it towards 6,000. One can buy with support of 5,600 in BSE.
Okay.
Right. BSE and Indian Hotels. Do you have a view on names like Strides Pharma, Indus Towers, and Aarti Industries? All of them are spiking currently at the high point of trade, Chandan.
Yeah, so let me first comment on the Indus Tower. The stock has bottomed out with some short covering activity. We have noticed that double top kind of formation is visible on the weekly chart, which indicates some uptick in the counter. Just 9 weeks back, it made the bottom near 315. 3 days back, also the same bottom was processed. So I believe up move could be there with support of 342. Your Indus Tower can head towards 375 kind of level. Apart from Indus Tower, Star and other counter could be in focus. Talking about Star, it has taken support near 590 zone and negated its lower top, lower bottom. So with support of 635, this counter can head towards 680 kind of level. So both the stocks looks good, expecting 3 to 5% surge in the price with some recovery in the broader market.
Okay, all right. Thanks a lot for that, Chandan. Well, let's shift focus then to our special segment. We get a few ideas for profit from Money Control Pro. Madhu Chanda Dey of moneycontrol.com joins us to talk about a stock that she's tracking closely. Madhu?
We are talking about Tata Consultancy Service, or TCS, that reported a tepid revenue performance in the quarter gone by, impacted by seasonality. The revenue in terms of reported currency decreased by 1.7% sequentially, and in constant currency it was flat. All other markets except for regional markets decreased in the quarter, and in terms of industry verticals, all the 8 industry verticals showed a degrowth. However, despite the tapered revenue performance, the company managed to improve its operating margin by 40 basis points sequentially, thanks to productivity gains, improvement in utilization, and pyramid rationalization. And these factors are expected to contribute to margin gains going forward as well. The quarter saw a very strong improvement in order inflows, and this was the best Q3 in terms of order inflows for the company. The management alluded to order gains from all the verticals and also gave a very optimistic outlook on the pipeline. However, what stole the show for TCS was the commentary that CY25 is expected to be much better than CY24, riding on demand recovery, especially an improvement in discretionary spending. We see limited downside in the stock given the improving environment for technology spending and a very decent dividend yield that the stock offers.
We take that point. Thank you for joining in. With that, take a short break, come back on the other side. We get you more on the markets and a lot of stock-specific action. You don't want to miss it. Stay with us.
Welcome back. Well, the broader market seemed to have got its mojo back after a lot of selling that we saw in the previous few trading sessions. Yesterday as well as today is quite good. And that's the reason why the mid-cap index is now at the high point of the day. Pull up a few stocks. You have Stovecraft. Big up move is what you're seeing on that stock. Remember, it was an underperformer after its listing, but now it's pulling back. Zomato as well, from around 300 rupees, it corrected to 235 rupees. Now that one as well is seeing a bit of an uptick, and we'll be looking for the Nifty review, in the next 1 month or so. Maybe, in fact, Zomato could make its way into the Nifty, so we'll have to keep an eye out on that one as well. But let's focus on a couple of numbers that came in late in trade. HDFC AMC, it's buzzing, post a strong quarter, and some positive brokerage notes. Vamakshi joins us to dissect that for us. Vamakshi.
Well, Nigel, HDFC AMC reported their numbers yesterday, and it was a good set, better than what the street was expecting. And a couple of brokerages have, covered the numbers for us. HSBC has a hold rating on this counter with a target price of 4,350. They say that rationalization of commission payouts and control on operating costs led to a strong PAT growth in the third quarter, but the market share has stagnated in the equity AUM part, and SIP flows could, keep punchy valuations under pressure. They've also gone ahead and raised their FY25 to 27 EPS estimates by 0.4% to 4.1%. There's another note that has come in from Nomura. They have a buy call, target price of 5,250 rupees per share. They've gone ahead and raised their FY25 to 27 estimates by almost 2 to 3%. They're building in strong operating profit CAGR of nearly 20% over the same period, and they're expecting it to largely track average AUM growth. Lastly, keep an eye out on a note that came in from Nuvama as well. They've got a buy rating. They've raised their target price from 5,150 to 5,200 rupees per share. They say that the company is steady sailing despite choppy markets. Yields are expected to improve quarter on quarter. The operational metrics this time around were quite steady. They're building in improved yields, and therefore they've gone ahead and lifted FY25, 26 and 27 estimates for net operating profit by 3.4%, 4.1% and 3.5% respectively. So overall, a thumbs up coming in for HDFC AMC from brokerages as well.
Thumb and stock both up. Thanks a lot for that, Vamakshi. Well, let's tell you about Welspun Corp, and that one's gaining in today's trading session. Before that, let's tell you what happened in November 2024. The company had intimated about the board's approval for setting up a 350,000-ton greenfield LSAW pipe facility in Saudi Arabia. Now, and yesterday, the management has given clarity on this. They say that Saudi Aramco and Welspun Corp, well, they have signed a strategic MOU. The company has also gone on to add that this plant will commence operations from the middle of 2026. The question is, if they're already given a heads up in November, why is it positive? A couple of points out here. The MOU with Aramco, it gives comfort of the buyer support, and also most of the production can be picked up by Aramco themselves. And this could also mean that they get approvals on a rapid basis. So that's one good news, because a big name coming in there, signing an MOU out of that 350,000, maybe 50% or more, goes to Saudi Aramco itself. Additionally, from Saudi to the United States or even to Canada, there is an FTA. So that means that even if Trump comes out with duties, well, they are not subject to that. And as it is, there are duties in place which they'll not be subject to as well. So in fact, Trump's policies could be good for Welspun Corp, because he's been talking about drill baby drill, which bodes well for them. And also, if he puts additional duties, then they'll be exporting from Saudi Arabia to United States. So they will not face the heat of Trump's policies. Finally, analysts, they expect payback from this particular plant to be roughly around 3 to around 4 years, going by a rough back of an envelope calculation. So put all this together, they had announced this in November, but the follow-up that came in yesterday with Aramco getting included, the street has read it positively, and that's why the stock has come up, from the low point of the day. In fact, it's sitting with a gain of close to around 5%.
All right, Nigel, that's about Welspun Corp. We were talking about Shoppers Stop as well, right? And taking cue from that, a lot of other retailers are doing well too this morning. So we have something like a Raymond. Remember, this has been one of the stronger wedding seasons, and this year itself, as against last year, there are a lot more weddings, wedding dates. So we have Raymond, which is picked up. We have names like Siaram Silk Mills, also beneficiary of the wedding space. And Kumbh is talking about, the hospitality pack. We have Indian Hotels, which has moved to the high point trade, off trade as well. Microfinanciers, they are the stocks in focus, following notes coming in by brokerages Jefferies and Goldman Sachs, both of them. Abhishek joins in to tell us more about that space. Abhishek.
Data released by CRIF is what these guys have been speaking, that is Jefferies and Goldman Sachs, and it is a back-ended data for Q2 FY25. So data suggests that, lenders have cut disbursements by 29% YOY, which has led to weakening of AUM by 4% on a sequential basis. So Jefferies also says that the number of borrowers and ticket size of loans have fallen after many years. So overdue loans have risen from 2.7% in June 24 to about 4.4% as of now, led by leveraged ones. So asset quality may take some time to normalize and loans may unwind, leading to pressure on the earnings front. With respect to, Utkarsh, small finance banks, Spandana and Credit, they have higher share of more than 4 loans per borrowers, which can impact them negatively. Bandhan Bank, as per them, can fare better. Now, Goldman Sachs has written on Credit Access Grameen, they have a sell rating and a target price of 577 per share. They say that they have analyzed bureau data to see any signs of recovery in MFI industry, where they don't find any encouraging point at this point of time. So incremental bureau data points that 37% of MFI borrowers do over leverage or overlap with retail borrowers as well, and that delinquency over there has been increasing on both MFI as well as retail loans by the same borrower. This represents about $18 billion of retail loans and about $10 billion of MFI loans. With respect to stock prices being off low, if you take a look, Equitas, Credit Access Grameen and Spandana Spurti, they are off lows anywhere between 12% to 20%. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, time to slip into a short break. We'll get you more on markets as well as on stock-specific action.
At the high point of trade, as you can see, the Nifty led higher by a couple of heavyweights, HDFC Bank and ITC. That's the one which has moved to the high point of trade as well. But let's move on and let's talk about the government looking to sell stake in 5 PSU banks, while the street is expecting potential divestment in other PSU companies as well. Hormaz, you've compiled some data on the government shareholding in some of these PSUs. Can you give us some more details?
When we last revisited this piece last year in January, that stake was valued somewhere around 2.5 lakh crores. But now, as of yesterday's closing, that stake has gone down to 2.1 lakh crore rupees. And that's also because of the correction that we have seen in a lot of these PSU names as well. Now, as of date, there are 16 PSU companies, including those 5 PSU banks where the government shareholding is in excess of 75%. 8 of those companies where the shareholding is in excess of 90% and the others is between 80 to 90%. Now, in some of these PSUs, at that point of time, at its peak, if you would consider, that stake was valued at over 3 lakh crore rupees. So from that peak, it's down to almost by a third as of yesterday's closing. Now, some of the companies where the stake is valued at the highest, LIC is a case in point. That's also where the government still holds around 96.5% stake. So that excess 21% stake is valued at well over 1 lakh crore rupees. Other companies include the likes of Indian Overseas Bank, IRFC, UCO Bank, and all these PSU banks that were in question yesterday with values of anywhere between 8 to around 20,000 crore rupees. Now, all of these companies have corrected anywhere between 25 to 40% from their peak, and that is showing in the decline in the government shareholding value as well, because at its peak, LIC's excess stake was valued at over 1.6 lakh crore, and same is the case for stocks like IRFC, Indian Overseas Bank as well, which was well over 30,000 crore rupees. As you just mentioned, it was yesterday's CNBC-TV18 News break that had sent all of these 5 PSU banks soaring up to 20%. Now, the DIPAM has also been mandated to bring an offer for sale route for a further stake sale in these PSU banks, and the street is also abuzz over a potential offer for sale coming in companies like Mazgaon Dock, which has been part of our D Street chatter as well, where the government still owns an 84.8% stake, and that excess stake is valued at over 4,500 crore rupees. So Mazgaon Dock in focus, a lot of these PSU banks are in focus as well, but the value of the government shareholding definitely has come down.
Okay, all right, Hormaz, thanks a lot for that. Well, just a couple of more names. If you can pull up Paytm, the stock has seen a sharp correction from 1,000 rupees all the way to around 800 rupees. That one's seeing a bit of an uptick, and Chandan told us about Indian Hotels earlier. Well, that one as well has moved to the high point of the day. But we've completely run out of time on Chartbusters. You stay with us. Trading Hour comes up next.